What's up, guys? Short video on whenever I talk to people, I'm like, look, whenever I'm looking at a deal, I'm looking for four main things, especially right now. Before there were six, right now there's four. Because if I can figure out whether that deal, the apartment building deal is going to get me those four things, I'm interested, right? And you should be too. These are priorities when I'm looking at a deal, period, right? Number one, capital preservation. That's number one. Like, do we want our investors' money in this deal? Will they lose money in this deal? Will this deal ever lose our money? Is it going to go away? Can it be destroyed? Is it big enough? Like, what can happen to the thing? Will this thing preserve capital? And one of the things that I was just telling my guy Zach on a podcast I was just on, I was like, when people convert their money from money into real estate, you don't have to worry about your money anymore. You just worry about the real estate. And if you're investing in a deal that's big enough where you don't have to worry about the real estate doing what it's supposed to do, then your money's always going to be protected. You always know that address is where your money's sitting at, not a bank account. All right, so that's number one. Number two is the all cash flow. Does the deal cash flow? Dude, it's everywhere. Try to get it. Try to look for it. Will this deal cash flow? If we ran our numbers, does the deal cash flow enough to pay the expenses, pay the debt, and to pay our investors? Does this deal cash flow? So all the time, we're always looking at this. Every deal I look at, first things first, will we lose money? Preserve capital. Don't lose that money. That's number one. Number two, does the deal cash flow? So when you guys are looking at investing in a deal, whether it's through Bell Capital, just know that I'm looking at it. Or if you're looking at your own deals, cash flow. That's another thing. So number three, can we get good debt, right? Or leverage. That's an L with E. Can we get good leverage, right? If the bank doesn't want it, I don't want it. Period. Look, everyone's worrying about the downside risk for all deals. Well, if you take a look, if you take every deal that you get and you shoot it over to your lender and you go, hey, would you size the loan on this deal? They will tell you 100%, do not do it past this price. If you want to do it, we won't lend you the money on it, or you're going to have to put down more money. When we underwrite a deal at 40%, 45% to put down the equity, and we're looking at a lender that's going to go 55 to 60% LTV, loan to value on that deal, the lender has to want the deal. If the debt doesn't support the deal, the cash flow, the NOI, the net operating income, I won't even look at the deal. So number one, don't lose money. Number two, it's got a cash flow. And number three, it has to have good debt. We have to be able to get good debt. If the bank doesn't want it, we don't want it either. All right. So number four is tax bennies. Benefits. The tax benefits. Close enough. All right. So it has to have some tax benefits. Real estate itself has the tax benefits. You get, if you sell it, you get the 1031. Or you get to do a bonus depreciation. You get to accelerated depreciate it. You get to accelerate tax benefits. And well, like I said, that's going to change next year, and it changed from last year. But does this have some type of tax benefits that we can take advantage of? If we sell, are we going to have to pay a bunch of money on our taxes? If we getting cash flow on our deal because we have good leverage, do we also get the opportunity, the possibility to write off that cash flow? Sometimes you're going to have a deal that you won't even pay taxes on that cash flow that you get, and you get to offset some of your other additional income tax, depending on the bracket that you're in. But when I'm looking at a deal, these are the four things we're looking for right now. Does it have the wherewithal to not lose our money? Our investors' money, Bell Capital, if we invest in a deal, is there capital preservation? That's the number one thing. I don't want to lose money. I don't want to lose my investors' money. That's first. Number two, does it cash flow? Does it cover our expenses? Does it cover the debt? Does it pay my investors? Will it continue to pay us for a long period of time? 5 years, 10 years, 20 years, worst case scenario. It's important to know your timeline, your horizon. Will it do that? Whether we're going to be in there that long doesn't matter. I just want to know it can happen. Next, can we get debt? Can we get leverage? Does the bank want the deal? If we take the deal to a lender and the lender goes, nope, we got to take that same deal to 5 lenders, it may not be a good deal. We may not want it, but I look at that as we're looking at possible investments. And last but not least, tax benefits, tax write-offs. Do we have the wherewithal to be able to keep some more money from the money that it is that we make? That is how wealth is created, guys. If you buy a property for $30 million and you put down 12, right? Let's just use that number. And you sell and you double the 12. You sell it for 42. How much of that other 12 can we all keep and roll into the next deal? Do we not have to pay taxes on it? And because we've kept the majority of our money, we can roll that money into bigger assets, bigger properties, more money into the fund so we can buy better assets or better quality of assets. That is how wealth is created. Keep more of what you make. How do you do that? Spend less money on taxes legally. And real estate's the number one asset to be able to do that. So I hope this helps you guys. This is what I'm looking at. These are the 4 things I focus on. 1, capital preservation. 2, does it cash flow? Will it continue to cash flow for me at any point in the future? Next, leverage and debt. Can we get good debt? Can we get good leverage? That's critical to every good deal. All great assets have great debt, period. And last but not least, do we get the tax benefits of owning this asset long-term, short-term? What are the benefits of the taxes that I can keep for myself, pass on to our investors, and we can continue to grow this thing as it relates to acquiring more assets in the fund? So I think this is important because I want you to understand what I'm looking at when I'm investing any money. So that way, as you're thinking through investing money with us or on your own or with somebody else, these should be in the forefront of your mind. These 4 things. These are investment priorities. These are rules. These are laws. These are vital policies and principles. Do not break them. I promise you I won't break them if you're investing with us. So let us know if you need anything. Continue to reach out to us at Bell Capital. Make sure to focus on cash flow. Cash flow. If it don't have cash flow, just say no go. Keep on going. Make sure to do that, guys. Hit me up if you need anything. Like this video, comment on this video, share this video if you get the opportunity, guys. We're trying to get our subscribers up. Subscribe to the channel, share it with other people who you feel like would like to hear what we're putting out about real estate, to hear or have questions about what we're doing. Reach out to us. And if you want anything, make sure to hit the link or go to bell-capital.com. You can go ahead and you can schedule a call with somebody on my team, a 5-minute call. Or you can reach out to me personally, and I'll make sure to answer your questions about what you got going on. I want to have you in our Bell Capital family. But remember, these 4 things save your life. Cash flow for life. Let's go.